What I'd like to do now is to compare loan mods and short sales, kind of help you make a decision and show you how they kind of work together. Obviously, they're two very different things. A loan mod helps you keep the house, a short sale you don't keep the house. But it's almost as if you're at a fork in the road. It's a question of whether or not you can afford the house, and this is what the banks are looking at. Now, when you do a loan mod, the banks tend to think, well, how much money do I have to give this person in order to keep them paying their mortgage? And the answer is always as little as possible. And they'll be negotiating with the homeowner to give as little as possible. In fact, in a third of the cases, according to the Fitch rating agency, the cost of a loan mod is higher than the original mortgage was. And the reason why is because they're really not giving very much to the homeowner in a loan mod. If anything, they're taking all the fees and interest and legal costs and they're piling them on top, and even though they extend them out 40 years, the payments aren't coming down that much. And in fact, also according to Fitch, the average payment is about 65% of the homeowner's pre-tax income. Now, if you were going to buy a new house and your payment was 65% of your pre-tax income, there's no way the bank would give you that loan. In fact, if it was 35%, you still might not get that loan because it's above the threshold. And I think now it's about 31% of pre-tax income that the payment needs to be. So 65%, that's too much. But in a case of a loan mod, you know what? From their perspective, it doesn't matter. They'll take as much from you as they can get. They'll approve the loan mod if you're willing to pay, even though 64% is clearly an unaffordable payment level. If you're paying that much, 64% of your money is gone, and gosh, what's your tax rate? Social Security, what's that, 8.25%, something like that. State tax, federal tax, all that money is coming out of your paycheck. And after you paid the payment and those taxes, really, how much money do you have left? And the answer is not very much. You have to pay your food, your utilities. You might have expenses for the children, clothing. You know, who knows? You might want to go on vacation. So in a loan mod, the banks aren't worried about your side of it. They're worried about their side of it, and they're going to give you as little as possible. Now, in contrast, in a short sale, the banks are looking at the real losses that they would have to absorb because the decision has been made that you can't afford the house, and as a result, they need to figure out how to liquidate the property for the least amount of financial loss. And oddly enough, what I'm finding that they do is they will seriously look at the loan mod after the short sale is pursued. So this is good news for homeowners that are in that difficult area where they can almost afford the house. Because if you can almost afford the house, and if you have a good negotiator who's pushing the short sale, a lot of times what can happen is then we use the short sale to get the bank to make a reasonable loan modification offer. In fact, I had just recently, the bank was doing a scenario where they were dropping the mortgage by, I guess, about 1/3 in order to accommodate a loan mod. Well, the homeowner didn't opt for it because they didn't think they could afford the house anymore, and they wanted to sell it. But this is a dramatic example of what banks might do in order to minimize their losses. So in this case, a dramatic reduction in the payment and the loan balance would have been in the bank's interest. So it's good for the homeowner to have a good negotiator on their team who's going to push the short sale, because there's some chance that the bank will then present its best offer for loan modification. And this is excellent news for homeowners who are at that point where they can almost afford the house if the bank were to help. Otherwise, what I'm finding in most loan mods, and the approval rates are horrible, and if you read my blog, you'll see that they are. The approval rates are just a few percent. The federal government's been pushing the lenders and trying to increase the loan mod approvals, but they're way down, 10% or less, and this is not good for the homeowner. But the short sale has a way of pushing the homeowner's button, and the short sale is the best way to get a good loan mod. So it's something you need to be aware of, and when you find who you're working with to help you with your situation, you need somebody who has that expertise and who's able to negotiate on your behalf and get you the outcome that's best for you.